Spend each day trying to be a little wiser than you were when you woke up. Discharge your duties faithfully and well. Systematically get ahead, day by day. At the end of the day, if you live long enough, most people get what they deserve. These lines are part of a famous quote of a successful billionaire who is considered to be the right hand of Warren Buffett. He's the vice president and backbone of Berkshire Hathaway. Yes, you got it right. He's none other than Charles Thomas Munger, an American from Omaha, a military meteorologist, turned into a businessman. And he's also the chairman of the newspaper Daily Journal Corporation. He is also on the board of retailer Costco. Mr. Munger is an active philanthropist and pragmatic investor and has a net worth of $2.4 billion. The billionaire has recently become a very big fan of Alibaba and has nearly doubled his investments in the company over a year. Hello and welcome back to our channel, Money Invest. Today in the following video, we'll be focusing our discussion on the move of Mr. Munger of increasing his investments in China-based company Alibaba. On one hand, Mr. Munger has shown his support to the Chinese government policy of crackdown on the Chinese e-commerce company and giant of cloud Alibaba. And on the other hand, it is reported that his company is doubling his investment in Alibaba. And to understand Mr. Munger's stand, we need to first brief about the Alibaba Group and its recent status in China. A Chinese multinational company, Alibaba Group Holdings Limited, famous as Alibaba, is specialized in e-commerce, retail, internet, and technology. Numerous business sectors around the world are owned and operated through a diverse portfolio of companies by Alibaba Group. The company was founded in 1999 by Jack Ma, with his 17 friends and students, with the name Alibaba.com as a marketplace site. Since then, it expanded its business into various sectors at a decent pace. In 2020, the Forbes Global listed the Alibaba Group in the top 10 most valuable corporations and named it as the 31st largest public company. It became the second largest Asian company to reach the $500 billion mark in terms of valuation and is valued as the sixth largest over the globe. But recently, Alibaba is facing a crackdown from the Chinese government. The e-commerce giant and its finance affiliate Ant Group is being targeted by the China government since last year. Bloomberg reported in a speech that the Alibaba founder had trained his guns on the financial system in the country and criticized the regulators for being short-sighted. This could be the probable reason for the crackdown, as the Chinese government stepped up its scrutiny of the company's practices and urged a restructure of its fintech business. Later, Ma has to step down from the chairmanship of the group. While all these happening around with the group, the shares of Alibaba sank from an all-time high in October, 200 to a record low. And despite a recovery of 30%, its stocks are still lower by 43% from the peak. Mr. Munger was reported to be praising the Communist government of China for cracking down on the Chinese e-commerce company and cloud giant. In an interview, the reporter from CNN Business asked Mr. Munger whether he regrets his comments about the financial regulators of China. He replied, "I would regret not making them." He further said, China, recognizing the horrible troubles that come with letting booms get too big, steps on the boom in the middle of it, instead of waiting until the very end and a big bust. Of course, I admire that. In that respect, they are wiser than we are. It amuses me that communist China is being smarter about handling booms than capitalist America. But I know a lot of people that are smarter than I am. Should we have a nation sometimes that's smarter than ours in some respects? Securities and Exchange Commission reported that 302,060 shares were held by Daily Journal, owned by Munger, which was valued at $44.7 a year ago, which rose to 602,060 shares by the end of 2021, with a stake worth $71.5 million. That's almost double from the previous quarter. The crackdown concerns on big tech firms from China capital have created worries of slowdown in Alibaba's earnings. Growth continued falling of stocks of Alibaba has aggravated investor Munger to bet even more on Alibaba stocks. Alibaba lost half the issue in 2022 to the 20% plunging of shares of Alibaba. Munger's decision of betting on Alibaba is noticeable because over the lone year, he has made several controversial statements praising the Chinese government for handling effective Jack Ma and other tech tycoons, criticizing the government's financial regulations. One of the most legendary investors of the current scenario is investing in a business that is on a downward trend and the market is avoiding the group. Will these investments of Munger become a valuable lesson for our time? Noteworthy is the timing of the acquisition, which raises eyebrows. It has occurred at a time when market sentiment regarding Alibaba is extremely debauched. And also, the Daily Journal Corporation shows almost nil acquisition activity in its investment portfolio, as Munger's other venture has not changed its stakes in 4 other investments. But buying more and more Alibaba shares in the fourth quarter is continued. Is this all happening because of Mr. Munger really? Or there is something else in his mind? Will these acquisitions in Alibaba by an investment giant? These are understandable and must have some largely hidden benefits which Mr. Munger can sense. The value of Alibaba has been fallen too steeply and dropped nearly 50% since January 1st, 2021. The market is unable to rationally look at the prospects of Alibaba's sustained e-commerce growth in its core area due to several problems stacking one above another for Alibaba. Charlie Munger is a highly experienced value investor who can understand the large impact emotions on Alibaba's pricing. Despite continuing negative factors affecting Alibaba's share price, to this day, the firm has 1.2 billion active accounts, and the internal value of such an e-commerce platform around the globe, probably the largest, should be agreed to be significant. Even though the top of the line, Alibaba, is depleting, but the proliferation of the e-commerce platforms is certain due to a considerable number of new shoppers expected to be added continuously to the ecosystem. As an estimate, the Alibaba is likely to add accounts of new customers in the range of million each quarter and is expected to have 1.5 billion customers on its platform by the end of this year, which will materialize Alibaba's retail marketplaces outside China. The prospects of international expansion of the Alibaba platform beyond the boundary of the area are undervalued at this juncture, and earning growth implies the massive potential of Alibaba to rebound in the market. Munger also must have given a thought in the back of his mind that investments from foreign markets and the acquisition of Alibaba by a US-based high-performing firm will attract international customers to the e-commerce platform, expecting the even better performance of Alibaba beyond the boundaries of China. Alibaba is expected to grow continuously in double digits and generate EPS of around and above $10 in the coming year of 2023 and 2024. Alibaba will continue to grow its top line, its free cash flow, and its bottom line moving forward. But key metrics may grow a little slower than in the past. Since Alibaba is still expected to grow earnings and revenues at double digits over the next 5 years, using an earning multiplier factor or EMF of 25 is justified. This could lead Alibaba to be revalued above $200. As an investor, the lesson to be learned from Charlie Munger's teachings is to focus on Alibaba's e-commerce possibilities in China and abroad, including the expanding addressable market, and significant Charlie Munger is teaching the market a lesson here once again, focusing on the possibilities for e-commerce in China and abroad of Alibaba's. Recognizing the firm's full intrinsic value is much higher than Alibaba's current share price, as Alibaba's sales and EPS are expected to grow at double digits in the coming future, due to significant user growth in Southeast Asia, including the expanding addressable market. The wrap-up findings of the incidents are: Charlie Munger's venture is eyeing to earn profits in multiple figures with the acquisition of Alibaba shares, and the most important part of the acquisition is that it is happening at a discount of 50% due to all-time low prices of Alibaba shares. And that's all for this video. Please share your views about the video and don't forget to like, share, and comment. Please do subscribe to the channel if you've not done that yet. Thank you so much for watching.